It can be like immigration. So we're like a one-stop shop. So it's a small place, but we have so many programs in our office where we like to give to the community. So with housing, we provide with, if you already have a home and you're going in foreclosure or need a loan modification, we have some counselor, we have financial coaching that can help you with your credit score or how to start saving money. As you can see, me and Evie, we do the pre-purchase. So we have people that want to purchase home for the first time. We have a counselor that does renting. So if you're living or want to find a new place to rent an apartment, he will help you with that. Also, we have a youth organization where they prepare them to be like advocates in their community and work with kids from the ages as small as I think it's 11 or 12
Yeah, I think it's
to 17 years old or 18 until they graduate high school. Um, so we have a community organizing that goes out there and checks the schools or anything that the community needs or anything that can talk to the aldermen to see if they could fix certain things in the community. And also we have the CDC, which is for business. So anyone that's trying to open a business in Belmont Cragen, a small business, or trying to get a grant, we have that program as well. Um, so this is a little bit of about our like what we have as far as counseling. Like I stated, we have the foreclosure prevention counseling, the pre-purchase counseling, which is me and Evie, the rental counseling, and the post-purchase counseling. Sorry. Oh, we also have if you're trying to like if you need help with your electric, we have the CETA team, the light heat. So if you need help with your electric or gas bill, we also have a team that helps you fill out the application and makes you they give you the information to see if you qualify if they can lower your payment. We also have this thing called Cara Chicago. It's an organization that if you're trying to find a new job or trying to increase your income, they help you and guide you on a program that they have. I believe is a program of 3 months, and you will have to attend Tuesdays and Thursdays. And they prepare you with your resume. They prepare you to get interviews with jobs that you're looking for or what they have opening, and also be able to help you to find if you're trying to do like savings or like trying to learn how to save on your accounts. This is part of, if you can see in this picture, this is part of our organizing team in the community. Like I said, we have the youth. We also work with older adults that are living in senior homes, or we try to help them with anything that they need. We work with education as far as schools and high schools around the community. And as far as the housing, right now with the property taxes, we have a person a counselor that is working to lower property taxes and try to make it affordable in our community. And this is the CDC. This is the business corporation as far as in Northwest Side Housing Center. This is a new organization that started in 2018. So the CDC works on local small businesses. So they try to help these local small businesses either to get grants and try to improve their small businesses with new equipment, new floors, and also try to promote them like with flyers or help them with anything that is needed. So also bringing small business in the community. So if you're thinking about bringing a small business in the community, we also will help you with that and see what are the guidelines. Okay, so this is pretty much what like Evie and I, what we look for, and this is what we do. So the most important thing when you're purchasing a home and what we do is we do a credit check. So when we pull your credit score, it's a soft pull. So it's not gonna affect your score. Now, if you go to a lender or you go to anywhere else that you go, if they don't have a soft pull, it's gonna, once they pull your credit score, it's gonna bring your points down a few points. It's gonna bring the points a few, like a probably like 10, it depends, 10, 7, 8, they'll bring it down. But with us, The advantage is that we are able to pull your credit score, and it's a soft pull, so it's not going to bring your credit score down or nothing. And we pull it from the 3 credit bureaus, which is TransUnion, Experian, and Equifax. So we do review your savings and checking. We make sure that you are at least saving 8 to 10,000 in your savings and checking account. The reason is because, purchasing a home, you need to have some money saved. At least we encourage, if you're going to purchase a home, our customers to at least have 3 months saved. Or not only that, sometimes the closing costs, it depends on the lender, you will have to pay a certain amount. With the down payment, if you do qualify for the grant, you don't have to pay anything up front. So, but we normally tend to tell our customer to have like at least 8 to 10,000 saved. So like that, you don't have to worry in the long run what may happen or what can happen. We review your income. That's important. We see how much money you are bringing in. We don't look at the net. So the lenders as well, they look at your gross. So that's why we have our clients to do like a budget sheet to see with what they're taking home and their budgets to see how much they have with the ratio. Because when we do the pre-qualification, we go by gross. And the goals that we establish when we meet one-on-one is like, it depends on the timeline. And the timeline could be like boosting your credit score or trying to work on a savings plan if you don't have any money saved.
Caesar, can I chime in real quick here?
Sure.
Basically, the reason why we do the process of the soft pull and the gross income is we're trying to imitate as best as possible as a loan officer, so that way you are prepared for that loan officer. We don't want you to go straight to the bank and find out you're not ready. So why do we ask for you to come to see us? Is because your soft pull is a credit inquiry on your credit report. And the reason why we do the gross is because it's the same thing that the banks are doing. We all know what we receive at net. And if we are going to get pre-qualified as a net, we will never buy a house, right? So why discourage you doing it as a net? We decide to go ahead with the gross because that's what the banks look at. So there's always a reason for the way we do our process, and that's one of the main things that we decided to do was do it like a loan officer, so that way you're ready. You have your folder with your documents, you have your certificate for down payment, and that way you are ready for that loan officer. When we refer you to 3 lenders, you are ready because this is what you brought to our table. So therefore you have your folder to go to your loan officers. Thanks, Caesar.
Thank you, Evie. Okay. So this is pretty like what it looks like with your credit score. So you could purchase a home with a 580 credit score. The only thing with the 580, you are able only to get an FHA loan. So this is the breakdown. So 580 to 620 will be a FHA. 620 to 640 can be FHA, some conventional, and some grants. When we say some grants, because with the IDA, you at least have to have a 640 to qualify for the down payment assistance. So if your credit score is at 640, you more than likely you are able to qualify for the IDA because that's the requirement, 640 credit score and above. If you're purchasing with someone else, like together, both of you have to be at a 640. So let's say, for example, if you're at the person that you want to purchase or your significant other is at 620, they will go with the lowest, with the 620. But if you're at 640, what you can do is once you meet with us, we'll pull your credit and we'll see what is it that needs to be needed and fixed. You can help your significant other or the other person. So like that, both of you guys could be at the 640. With 640 and above, you qualify for mostly all the grants that they're offering. And 720 and above is like the best rate. You'll have the best interest rate and the best rate that, and also with all the grants that they're offering. Evie, do you want to chime in? You want to explain a little bit more, or?
Basically, for the down payment assistance, both IDA and Down Payment Plus has the 640 minimum credit score. Some lenders can layer those programs if they have the funds. Right now, with the increase in home buying, those funds will run out. It is a first come, first serve basis, meaning you have a real estate contract, those are the ones that are going to be processed first. No bank will reserve any money for clients that only have a pre-approval. So basically, just make sure you do your due diligence and ask these questions. Ask those three same lenders the same questions so that way you are aware of the process for each lender. No bank will reserve money if you have a pre-approval. This is very important for you to remember. They will only reserve those funds once you have your real estate contract. Thank you.
Thank you. Okay, so this is a chart pretty much of the FICO score. The FICO score is what they look at as far as your credit score. So most of the 35% is that is important that they look at is your payment history. The 30% is the amount that you owe. An example of amount that you owe. So let's say you have a credit card and the max, you get a $9,000 max. So for example, let's say if you're at like 8,500, you know, the amount that you owe is too close to the max. So you always want to be below that. You always want to be at least 30% and not above the 30%, because that will impact your credit score. Even though you're making your payments monthly, and you're making them good, but if you're close to the max of your limit, it's not going to do anything. So you always want to make sure you bring that down, do not go over the 30%. And the other, as you can see, we have the 10% is like new credit. So if you open a new credit card, it covers 10%. The length of the credit history, depending how long you had the card and you've been making your payments and the years, is 15%. And then credit mix is like the other remaining that is in there's 10%. So as you can see, most of them is the amount that you owe and the payment history. The payment history meaning that you were consistently making all your payments and you were never behind, and that covers 35%. I'll leave it up there for 30 seconds like that. You guys want to write it down.
Does anybody have any questions regarding the credit part?
Yeah, anyone has any question?
What about student loans?
That's a good one.
Okay. Evie, you want to answer that one about the student loans?
The student loans, after we're done presenting, if Armando would like to talk about the process, the student loans, if they, from what I understand, if they are in like a forbearance, the lenders or some of the lenders will take 1% of what you owe and put that in your debt. Why do they do this? Is because they want to make sure you still can afford your home after that forbearance is lifted up. Does that answer your question?
Yeah, I'm just curious. I'm a graduate student. Well, I'm finishing school, and I know eventually I have to start paying stuff back. And I'm never really sure how that impacts credit because I've been in deferment for a long time.
Yeah, well, congratulations on finishing your career. Yeah. That is a lot of work.
Thank you.
Yeah, but definitely, Armando, are you there?
Mm-hmm.
Would you be able to talk about that after Cesar finishes his presentation for our student debt? Thank you.
Most certainly. Yeah, I can touch on it. And yeah, I'm making notes here as we go.
Awesome. Thank you.
Thank you. Okay, so this is right here. We have a chart of if you were on foreclosure, short sale, or if you did any of these bankruptcy. So this is a breakdown. So let's say if you had a foreclosure, in order to qualify for an FHA or purchase home with an FHA, takes up to 3 years. With a conventional, is 7 years. If you had a prior short sale, where the FHA is the same, 3 years for a FHA, and for a conventional, it depends. It could be 2 to 4 years. For a bankrupt Chapter 7 or Chapter 11, For FHA is 2 years, and for conventional is 4 years. For a Chapter 13 is different. So for a Chapter 13 for an FHA is only 1 year, and conventional is 2 years. And I believe, was it Kimberly? Kimberly, does this answer your question?
Yes, it does. Thank
Okay,
you.
you're welcome. Do you want me, I'll leave it up for like a minute. So if you guys want to write this down with the years and everything.
Things are always changing, but this is the most
Yeah.
updated information. So if you have any of these challenges here, this will help you decide how long you have to be able to establish or reestablish credit as well as saving, because once we have a stained credit report, it's always good to show the lenders that you have some type of decent money in the bank.
Yes.
Not only that, but remember, once you are discharged from bankruptcy, you need 12 months of on-time payment showing on your credit report. That way the lenders do see that you are doing your due diligence after that mishap, because we all are humans. We all go through mishaps, right? But now we got to show the banks that we are worthy.
Okay. So right here, this is our director, but now we have a new director. But this is Julio. He was able to help this young man to purchase his first home. So this is how much is needed in order to qualify for down payment. So normally a FHA down payment is 3.5% of the purchase of the whole purchase. Okay. The conventional is 5% down. And it's important, if you have any liquid assets that you own, you can also use that. If you have 401k, you can also use your 401k to purchase your home, or any savings. If you have any savings, CDs, or anything that you have, you can also use that. And if you have a family member, like if your parents or someone's trying to help you, they can always give you the amount as a gift. So let's say if they're transferring from their account to your account, like $10,000 or $15,000, you got to have proof of that. So, you know, when they ask for the bank statements, these lenders, they want to make sure that they show at least your parents' account number going to your account, because, you know, they really go into deep, and they want to make sure that you're not getting this money in other certain ways. So it is important that, yeah, you can receive gifts from your parents or anyone that's trying to help you, but you just got to back it up. Either if it's having them transferring from account to account where they could track it from their account to yours, or even writing like, yes, I gave my daughter or I gave my friend this amount of money to purchase towards their home. Okay, so right here, this is the income. When we review your income, these are like what is needed. So we actually need a 2-year reported income. So you will have to be working either at the same place for 2 years, or if you went, let's say if you were working at a different job and you went to another job that it matches, that it is kind of the same thing that you were doing. So let's say, like, for example, myself, I was at HSBC, but then I got laid off, but then I went to PNC. So, you know, it's a banking, so it has to do with mortgage. So they will use it. Even though I got laid off, they will use my 1 year at HSBC and the next following year with PNC. Lenders will also use, like, for example, if you were working at Walgreens, getting paid what, like $14, but then you went to a different job where you're getting paid $25, that's absolutely fine because you're increasing your income. For college students, so people that recently graduated, all they need is just the offer letter of the job that you got hired, 1 month pay stub, and your diploma. For business owners, we need 2 to 3 years tax returns where your year 2 date profit and loss, and make sure that it includes the letterhead of your taxes with all the pages and all the schedules. Okay, so this is like a little scenario or breakdown. You guys can try this at home if you want. So what we did, we took like an annual salary of 34,000. So this is like the salary for the year. And we divide that with 12 months, which give you a gross monthly income of 2,833. What we took down here, the debt to ratio, is pretty much the annual debt expense in the United States. They with cars, with credit cards and everything that you owe. And as far as a total, we took like 14,620. So you guys can try this at home. You could use all your expenses that you have annually and put it and then divide it with your annual income, and it will give you your debt to ratio. And at this point, it gives you a 43%, which is kind of great. You always want to keep it below 50 or 45. You'll be okay with 45, but the lower the better, because it's showing that when you purchase a home, your debt to ratio is not high. So 50 and below is great.
Does everybody have any questions on your debt to income ratio? This is where the lenders look at how much you owe on your credit report versus how much you make in a year. This is important because if you have a lot of debt, the more debt you have, the less you qualify for. So this is very important to understand, because when the lender comes up to you and says, sorry, you can't make it because your DTI is too high, this is what they're talking about. You're making $1,500 a month, but your debt in your credit report is $1,200. There's no way they can pre-approve you for a home. So this is really good for you to understand why we go into this debt to income ratio and why the lenders look at this to go ahead and pre-approve you.
Yes, thank you, Evie.
Okay.
So right here we have a little example. So once you find your debt to ratio, so we took your gross monthly income, then you times it with your debt to ratio. Normally it'll give you like an estimate of how much you can qualify monthly to purchase towards your home. So right here, it shows that with that debt to ratio and your gross monthly income, and this is with all the expenses, because you were able to get your debt to ratio percent, you could qualify for a home of a monthly payment of 1,218. Roughly, it's almost like an estimate of a home that is 150,000. So mind you, this is 1,218 with a home of 150,000. Normally that could be 150,000 at this moment. It could probably be a condo, because now homes are like, you can get homes depending on the area for close to almost 200,000. But right now, most of the homes are running 230 and above, depending on the area. But for 150,000, that's roughly the payment of 1,200, and I believe was 68.
Caesar,
So
can I jump in there really quick?
yeah, go ahead.
This is yeah, and just for all of you that are on this call, it's very, very important that you know that this estimated monthly payment, I believe we are including the following, which would be the principal, the interest, the taxes, and the insurance.
Yeah, sorry.
Okay, that's a combined monthly payment. Okay, not just principal and interest. Sorry for that.
Yeah,
thank you.
That's including, like Armando said, I do apologize. It's your property taxes and your insurance. Now, as far as the property taxes, it depends on where you're gonna live, because the only thing when you purchase a home that will stay the same as your principal and interest, the only thing that will change is your property taxes depending what area you're gonna live in. Sometimes you get property taxes that you pay monthly of 300, 200, but then depending on the area, it's 5. Some of them are like 500 or 600 a month. So it all depends where you're looking at. But they'll go more in detail when you're ready, and you meet your lender and you tell them what area you want to live in, because they could check how much are the property taxes in your area that you're trying to purchase the home. So in this scenario, we just took your monthly payment. So let's say the monthly payment was 1,219 with your principal, interest, insurance, and property taxes. But let's say, for example, you have a car payment of 350. So you got to eliminate that 350 of your monthly payment of the debt that you have, for an example of a car payment. Now you see how your monthly payment gets lower to 868, where you won't be able to qualify for a house that was 150. So with that 868, it's roughly like a property of just 75,000. So it's really important to try. I know, if you purchase a car, I'm not trying to tell you, oh, pay the whole car in once, but it's really important if you do have a car payment and you have credit card, and you have some credit card, make sure to eliminate the credit cards, especially if they're small. If you have a credit card that you owe like 1,300, focus on eliminating that. And once you eliminate that, the only debt that you will have is your car, which I know car is more, car roughly is like 17 to 20,000, but it'll be easier. There'll be a leeway instead of focusing on having multiple expenses and just focus on one expense. So, and if you do have a credit card and you paid it off, I would advise you to use it because it's gonna increase your score, but use it wisely. Use it like, okay, I'm gonna put gas. Put the gas at the end of the month, boom, you just pay whatever you purchase on gas or groceries. Things that that you have the money that you could pay at the end of the month. So if you use it on gas and it was $40, just put $40 aside until that monthly, at the end of the month, until that payment comes, and paid it all at once. So like that, you are able to build that credit history and the length. Never close your credit cards. Even if you paid it off and you're not using it, do not close it because that will really drop your score. Just leave it open. Even if you're not using it, let them close it for you. And even if you got to pay a yearly fee of $50, pay that yearly fee because eventually, if you're not using it, they're going to close it. I mean, they're just going to close it on their own, and it's not going to affect your credit score. But if you do have it, like use it for smaller things, groceries, gas, but make sure that you have the money so like that at the end of the month, you could just pay it all in full and don't build that debt.
Can I chime in?
Yeah.
Okay. In regards to your credit cards, I've had a couple of clients doing their due diligence and paying off their credit cards, but then they don't use it for 6 months, so they will close it. This is very detrimental on the credit score if you don't have a lot of trade lines. So if you do zero out your Visa card or your Victoria's Secret card, use it every month for a small item and pay it because that will increase your credit score. If you are going to buy a house, do not stop using your credit cards because they will close them. That's happened already to 2 of my clients. In regards to your car note, correct me if I'm wrong, Armando, but as long as you owe less than 12 months of payments, the lenders will not use that as part of your debt to income ratio because you're almost done paying it off. Is this still correct, Armando?
That is correct, but I would suggest that you check with your lender because that amount of months can vary anywhere from 12 months to 10 months.
Thank you for pointing that out.
Thank you.
Okay, good to know. Thank you.
Yep.
Okay. So this is a timeline of, so when you meet with Evie or Nye, this is normally like, we did like a timeline, like how long would it take or where would you be at? So let's just say if right now, if you're ready now, you have a 640 credit score, we put 5,000 in the savings. If you have 5,000 in the savings, it's like you're ready now. So normally this process would take quickly like a month. We refer you to the lenders. You'll call the lenders and you pick the one that provide you the right information for you. Like, once again, we don't force you to be like, oh, go with this one or go with this one. You make your decision. Remember, this is something that where you can qualify for, what you can afford and what programs they are offering for you guys. If it's something that takes 3 months, it's something that we will have to work on, is reducing some credit card debt and continue saving. So if it's just reducing a little bit of the debt that you have on your credit report and a little bit of saving, it could take up to 3 months. If something that would take up to 6 months is like mid credit repair. So if we gotta really work on tackling some of these credit cards or any credit or collections that is showing on your credit report, and focus on savings. So if it's something that we need to start saving a little bit more to get to at least the 5 or 8,000 range, it could take up to 6 months. Now, something that would take almost up to a year is if it's something that is heavy credit repair and you haven't started saving and you're actually starting saving with us once we have our one-on-one. Evie, you want to jump in as far as your experience with clients of
Oh, yeah.
the timeline?
It's okay if you guys are not ready today or tomorrow. I've had clients come to the workshop and a year or 2 years later, depending on their, their circumstances, they come back and they're ready. So it's okay if you're not ready today, but at least you're getting your education piece so you can be prepared. Now, every year the down payment assistance is different, or they do change. So just follow up with us on that aspect, because we do try to catch up to all the updates on the down payment assistance programs. And please keep in mind that each bank has their own down payment assistance as well. Some banks have their own $2,000 or $3,000 grant. So it's always good to first check with the bank that you work with right now with your checking and savings to see what they have to offer. Of course, don't let them do that hard pull if you're not ready.
Thank you.
Oops, sorry. My thing is slow.
Okay.
Now
So why wait? If you guys are ready, might as well just buy now. I mean, don't be afraid. The people that we work with, and like I stated, like all the lenders, all the realtors, and the people that we work with is people that, we have worked with and we had great feedback from our clients, and it's people that you can trust. What I tend to ask my clients once I refer them, it's just like, let me once a month, because we follow up. I'm like, if you have anything, if you have any questions, feel free to reach out to me. Let me know how your experience is. Let me know how the lenders or the realtors are working with you, because your feedback is going to allow us to continue to work with the lenders and the realtors. And if it's something that's going on, we'll reach out for you and we'll work something else, because this is supposed to be fun. It could be a headache at times because finding the right home is not easy, because you could go and be like, okay, I want this home, but then somebody else has a better offer or somebody else can jump on it real quick. So it can be stressful, it can be fun, but we try to work with lenders and realtors that give you that ease way, like where you don't have to stress and try to get you that home that you really are looking for. Evie, you wanna do these last 2 slides?
Sure.
I know you. All right, cool.
No problem. Okay, thanks to everybody for your patience. We're almost done. I just wanted to first explain to you the virtual process versus first-time homebuyer face-to-face. We usually have it at Wright College 2 Saturdays in a row, 4 hours each. I don't know about you guys, but I don't see us sitting here for 4 hours doing all this. So what we decided to create was an hour and a half tops for 3 Saturdays in a row. And that way you'll get your certificate after that. Why do we have this? I feel like this is an education piece that's very important as even for today's market and what Times is showing us right now. Why stop? Let's keep going, even if it is a virtual basis. So these next 2 slides is basically when you are ready with that pre-approval. The difference between a pre-qualification and a pre-approval. Caesar and I can do the pre-qualification. That is an estimate of what you can be approved for. Remember, we are not the banks. As much as we try to process everything as a bank, so you guys are already getting used to that, we cannot give you a pre-approval, but we can qualify you, meaning the estimation of what you can get approved for. When a bank does your pre-approval, that takes about 7 business days for you to get that official letter. That is a hard hit. They give you the amount that you qualify, that you can be approved for, and it's already checked your bank, savings, your credit, all of that. Verification of employment, all of that good stuff is going to be done by a bank. And that's why it takes 7 business days. Once you get that pre-approval, the next thing is you get the realtor, have a home inspector, and a real estate attorney. This team is very important. Of course, a loan officer is much more important because they are dissecting your life. Your own mother ain't gonna know what's going on with you, but your loan officer will know more about your business than what your family will know. So that's why it's very important to be honest with your loan officer. Don't hide things from them, because all they're gonna do, all that's gonna happen is you're not gonna get approved, or I wish you would have told me, we could have, waited a couple months. It's happened. So be honest with your loan officer. But when it comes to your realtor, they're going to know what you need, what you're going to have, and what you can get for the money that you're approved for. Your home inspector. Your home inspector is going to go ahead and give you that report that you need for any type of future negotiations with that real estate attorney. So this team right here, you need to pick it. I don't want you to go through, I already have a realtor, but this person told me to go to this person. I want you to decide who's your realtor, who's your home inspector, and real estate attorney, because that's the team that needs to work for you. You're the boss. This is very important. You're going to interview your realtor. You're going to find out if they have good referrals, because you're going to spend a lot of time. Some realtors won't go to the suburbs. So if you want to buy in Crystal Lake, some realtors won't go that far. And if you need to pay something up front to your realtor, run the opposite direction, because the realtors have accepted to receive their payment at time of closing. No realtor should be asking for no money up front. Run away. Any questions so far? Did I scare you? I don't mean to scare you. Okay. So basically, as a rough next steps is, you went through your credit, you got your pre-approval, but before you do that, make sure you go to a housing counselor so you can get that soft pull and prepare you. We do have different lenders that we can refer you to. We cannot just steer you to one. We have to give you 2 to 3. If you already spoke to your lender that you already do your checking and savings with, that's already one out of the way. So then just go ahead and talk to 2 more just to see which will be more suitable for you. Okay? Any questions? So what's your next step? Your next step is to go ahead and schedule an appointment with us. We are doing phone appointments as well as Zoom or Skype, whatever is more comfortable for you. The only thing that we request is an intake packet with a copy of your ID so we can move forward and do your credit score, your pre-qualification, and talk on the phone with you. All your information is secure. And as soon as we get back to the office, we will make files and get them all ready for our HUD audits. Just because we're doing work from home doesn't mean that we can slack off. We are being checked on, and we go to the office once a week to make sure everything's done correctly. So Cesar and I are ready whenever you guys are. The next 2 Saturdays, we're going to have presenters as well as myself to go ahead and finish this process. Your homebuyer certificate will be sent via email after the 3rd Saturday. Any questions about that, guys? Okay, remember, I'm not here to scare you. I'm here to prepare you. So I hope to hear from you next time. Cesar, do you have anything else you wanted to say before we have Armando jump in?
Just due to this pandemic, just bear with us. We don't, like me myself, I don't have a printer, I don't have a scanner, but once we do the one-on-one interview, we'll send you like an intake package via email. Just try to do your best filling out those forms and sending us back to us via email with your documents that is needed. But we'll get into more details once you reach out to us, and we'll set a time and an appointment when we can do the one-on-one. And yeah, just bear with us, and hopefully we could get all through this quickly.
All righty. If nobody else has any questions, we can go ahead and get Armando. There's one particular info about 1% down payment assistance. that one of the clients had a question on. Can you explain a little bit about the 1% down payment for the first-time home buyer?
I most certainly can.
Thank
Okay.
you.
I will touch on that. First and foremost, I want to thank both you, Ms. Evie, and Caesar for allowing us and having us with this meeting, with this information. It is very, very important in preparation. And obviously, you know, it is very important that you as the participants get most of this information up front before you all make a decision as to moving forward, whether or not you're prepared and whether you're ready to go and purchase that property. So with that being said, I want to start, if I may, by telling you the following. Okay, obviously I work for a bank, but by no means does that mean that you need to use our services. We are here to help. Okay, we are going to be part of a team. All right, and then quite basically, you know, obviously we would love for you to use our services, but the reality of the situation is that you should, as Caesar and Ms. Evie stated, you should go and interview each and every person that's going to be working for you. Why? Because we are going to be doing that. We are working for you. It's not the other way around. Okay. I always recommend, as Ms. Evie and Caesar stated, that you, before you make that decision, okay, this is the house I'm buying, you should already have your team assembled. Okay, you should assemble your team, and that team should have 5 entities, in my opinion. Okay, those 5 entities is going to be, you know, your realtor, your insurance agent, your attorney, your inspector, and your mortgage rep. Okay, now with any team which is assembled, such as in baseball, soccer, football, whatever the case may be, okay, those are the teammates. That's what makes up your team. But in every team situation, there's a coach, there's a manager, there's something that's overseeing that whole scenario. In this case, your coach, your manager, okay, is going to be Northwest Side Housing Center. Okay, they're going to make sure and oversee that everything is going the way it should be. Okay, so by all means, I highly recommend that you stick this out and you continue through the process, because they are going to be a significant help in this process. Okay, with that being said, again, with those 5 entities, we highly recommend that with each of those, you interview at least 3 of those entities. Okay, and the reason for that, I'm going to give you an example. Once again, when you go to a job interview, okay, when you're interested in a job, okay, what happens? Okay, you don't just go there and they say, okay, yeah, here, you can have the job. No, it's an interview process. So you should do the same. Okay, you should do the same. That way, you are going to have a better idea, and you're going to be able to pick the person that's right for you. Okay, not necessarily for me, not necessarily for Northwest Side Housing. Remember, you're going to be making that payment, not us. Okay, so that's why we recommend that you do at least those 3 interviews with each of those individuals that are going to be representing you. Okay, with that being said, I'm going to go ahead and move forward and tell you, very, very important, when you go and do those interviews, at least 3 of them with the 3 different banks, one very important thing: do not, again, please write this down, do not let them run your credit. Do not let them run your credit until you make a decision as to who you are going to pick. Okay, and that's the first thing that they're going to want to see, they're going to want to do. Okay, why? Because it's going to make things a little bit easier for them if they see your credit score up front, which is okay. You know, that's the way it should be. However, when you go to these interviews, okay, and you go specifically to the banks, bring that credit review that Northwest Side Housing Center is going to do for you. Bring that with you. Okay, all the information that the loan officer is going to need is going to be on that credit report, so they won't have to run it. Okay, so avoid running that credit until you have actually picked the lender that you're going to be working with. Okay, the lender that's going to be representing you. Okay, does that make sense?
Yep.
Okay, all right. So, and by all means, please feel free to stop me at any given time if you have any questions or concerns. Okay, thank you much. So again, do not let the lenders do a credit check. Why is that? Because if you do that, you're going to go to at least 3 of them, right? If maybe even more. Every time that your credit is checked, it can hurt your credit score. So you don't want to have that score come down, especially if you're at the level where you're just barely making it, if you will, okay, with regards to the credit score. So you want to avoid that. Once you do make your pick and choose who you're going to go with, it's going to be very, very important that you ask the question of that loan officer. Ask the type of question, you know, what type of products do you work with? Okay, what can you offer me? Okay, the majority of the lenders out there are going to have anywhere from 2 to 3 different types of loans. We touched on them basically, you know, your FHA loans, your regular conventional loans, and then one that wasn't mentioned but is also there is your community lending loans. Okay, community lending loans are a little bit different than the other two, and I'll just touch base on each of those, so that way you can get at least an idea as to what you should be asking that loan officer once you do go and interview them. Okay, your FHA, as stated, is going to be credit score requirement of 580 or above. Okay, that may vary from bank to bank. Okay, and the reason for that, especially nowadays, is because banks are making adjustments that they feel is going to be beneficial for them with regards to avoiding the risk factor, if you will, or diminishing the risk factor for them. Okay, so again, it can be anywhere from 580 credit score requirement, and I've seen as high as 660 for FHA nowadays with this pandemic. Okay. The down payment requirement for FHA, again, is 3.5%, and you can use it to purchase anywhere from a single-family home to a condo, a townhome, up to a 4-unit property. Okay. Now, this FHA loan is geared towards first-time home buyers, so there will be a requirement that you live in the property if you're going to be using this loan. Okay. And again, this is although the funds are filtered through the banks, these are actually federal funds. Okay, federal funds that you'll be using. Okay, and there's some perks to it. Again, the down payment requirement is only 3.5%. We're going to go on to the conventional loan is the next one. Okay, your regular conventional loan. Regular conventional loan is basically, you know, you're using the bank's funds. Okay, the bank is the one that's actually lending you the funds to purchase a home. The credit score requirements for those are typically anywhere from 620 or above. Now, the big difference between FHA and conventional, other than the credit score requirement, is the down payment requirement. If you have that 680 credit score on a conventional loan, you're going to be required to give the minimum payment of 5%. If your credit score is under that 680 and it's somewhere between that 620 and 680 amount, then that down payment requirement is probably going to increase. Okay, and it's going to increase depending on what your credit score is. It can be as high as 20% down payment. Okay, so very, very important that you at least have an idea as to what type of product you're going to be using so you can prepare for that. Okay, again, conventional can be anywhere from 5% to 20% down payment, and that would be the same, single family home, condo, up to a 4-unit property. Now, another major difference between your regular conventional loan and your FHA loan is that your conventional loan, if you're purchasing a property that's multi-unit, whether that be a 2-unit, 3-unit, or 4-unit, the down payment requirement may increase as well, up to that 20%. Okay, again, depends on what it is. FHA, not the case. Okay, FHA doesn't matter if you're going to be purchasing a condo, a single family home, or up to that 4-unit property, that down payment requirement is going to be 3.5% down payment. Okay, that's across the board. Doesn't matter what credit score you have, as long as you qualify for it, that 3.5% down payment is going to be, again, across the board. Any questions in regards to that?
Yeah, real quick, before I forget, I didn't mean to interrupt like that.
Okay.
I got asked, with an FHA loan, do you have to provide proof of residence at the home for the full length of the loan? I didn't think so, but can you clarify that?
And you were actually correct. You will not have to provide proof of residence for the duration of the loan. No, that is not the case. That you're going to want to, they're going to want to see or make sure that you're going to be living in that property at least for the first 6 months. Okay. After that, you pretty much are able to do whatever it is that you want with it. Okay. You can live in there for the rest of your life, which would be great. You can rent it out if you're going to be purchasing something else. Okay. Just mind you that once you have this FHA loan, okay, you cannot get another FHA loan at the same time. Okay. It's one per customer at the same time. You can get another FHA loan if you sell that property and you no longer have that loan with FHA. Okay, so you can request another FHA loan if you're going to purchase later on. So again, one FHA loan at a time. That's it.
That's
okay?
Good to know.
All right. And again, are there any other questions?
Yes. Another question was, is there an income bracket for FHA loan? But I didn't think so, but just to make sure.
An income bracket per se,
Yeah.
not necessarily. There isn't an income bracket, quote unquote. However, that same calculation that was shown earlier, I mean, you're going to have to be within that calculation bracket, if you will. Okay, so there's a debt to income ratio that's going to be used. Okay, for that FHA loan, you hit it right on the head, 50% and lower. Okay, and when I say that 50% and lower, mind you, that is your mortgage payments that you're going to have, plus all other outstanding debt that you have. Okay, does that answer your question?
Yes.
Okay, perfect. So again, for FHA, okay, again, under 50%, all outstanding debt is what you're going to be looking at. Your debt to income ratio with regards to your mortgage payment, which is known as your front end ratio, okay, you're going to have to stay with under 43%. Okay, what does that mean? Well, what that means is that of your income, only up to 43% of it should be used as your mortgage payment. When I say mortgage payment, I'm talking about your PITI payment, which is principal, interest, taxes, and insurance. Okay. Now, with regards to the third product that I mentioned, now mind you, not all banks offer this type of product, that third product, which is a community lending loan. Okay, and these are specifically for first-time homebuyers only. Okay, typically, you know, again, they are geared for first-time homebuyers, and typically there are some restrictions with regards to the type of property that you can purchase. Typically, it's going to be a one unit, which would be a single family home, a condo, or a townhome, or some of them, they'll allow you to purchase a two-flat. Okay. These community lending loans, they're not geared towards I want to say making any income from the renters, if you will. Okay, so that's why they keep it to a single family or a condo or sometimes a 2-unit. Okay, and the big difference with regards to these types of loans is the following. Okay, some of them, and again, this is one of the reasons why you're going to be interviewing all of the banks that are out there that you're considering, is to see first and foremost if they offer that type of product, and if they do, you know, what's behind it. Okay, what are the restrictions? What are the requirements? Typically, this type of product is beneficial to first-time homebuyers because it only requires, most of the time, only a 3% down payment. Okay, as opposed to your 5% or your 3.5%. Okay, so again, 3% down payment. They will typically require a credit score of about 640 or above. Okay. Another big plus with regards to this product is that if you complete the training that you're going through right now, and you receive that certificate, that first-time homebuyer certificate that you will receive at the end, two very good things are going to happen for you. One, again, from bank to bank, they may give you a reduction in the interest rate. Okay, so for example, what does that mean? So say, for instance, if today's rate, I'm just going to use a round figure. Let's say if it was at 4%, because you completed this course, they may be able to offer you a 3.875% as opposed to a 4%. That may not seem like a whole lot, but trust me, long term, it's going to add up. It's going to save you a bunch of money. Okay. Now, another positive with regards to this is that this type of product, some of them, not all of them, they don't require you to have a Pmi insurance. Is everybody familiar with Pmi? For those of you who are not familiar with Pmi, basically what Pmi insurance is an additional insurance. Okay, that insurance is not for you, and it's not for the property that you're purchasing. That insurance is an additional insurance for the funds that the bank is going to lend you. Okay, so again, with these community lending products, some of them don't require you to have that Pmi insurance. However, in order for you to get that benefit, some of those, again, the ones that do offer this type of product, they're going to require that you have that first-time homebuyer certificate. And it is very, very beneficial because, just to give you an idea, depending on how much you're going to be spending on the purchase of the property, I mean, that can be a pretty penny. Just to give you an idea, on a monthly basis, that insurance, it can cost you anywhere from, let's say, $70, and I've seen up to $350. Okay, so you can imagine, you can do the math, you know, off the top of your head, that can be thousands of dollars that you can be saving. Okay, now, with regards to this Pmi insurance, the first-time homebuyer products that do require this type of insurance, okay, some of those banks, they do require it. Those banks, however, if you have that first-time homebuyer certificate, they will actually give you a reduced Pmi payment. Okay, so there is a benefit there. Again, something that you have to ask, and you should ask the lenders that you're interviewing. Okay. Now, with regards to the down payment assistance, there are some down payment assistance programs out there that you should all be asking about. You know, there is the IDA program. Okay, the IDA program is basically a state of Illinois down payment assistance program that you can all benefit from. However, in order for you to benefit from that, you do have to use the IDA program. Okay, and basically what that is a mortgage product that's going to be run by the state of Illinois. It's basically what it is. Okay, now that down payment assistance, it can be anywhere from $6,000 up to $10,000. Okay, depending on your overall situation. And that's something that you are going to, if you're interested in that product, you're going to have a conversation with your loan officer to see where you fall, where in that range you fall. Okay, now just something that you need to consider for this particular product, two very important things. One is whatever amount that you receive, one, it can be forgivable. Okay, so if you live in the property for X amount of years, I believe it's 10 years, then you don't have to pay it back. Okay, it's a gift. If you qualify for it. Now, if you qualify for the down payment assistance, and depending on where you're at with your income, your annual income, your family income, you may have to repay that amount. Okay, now, although you may have to repay it, the majority of the people that do, okay, which is not a lot, the majority of them are forgivable. The majority of people that do have to repay it, it's at a repayment at 0%. So they're not going to charge you interest on that, okay, which is always a good thing. And then the repayment period would be a 10-year period. So your repayment amount would be very, very, very low. Okay, it's not a high amount. With regards to the IDA product, okay, it's a little bit different than any other product that any bank will offer you, and the reason for that is because the banks, we do not control what interest rate you're going to be getting. Okay, that interest rate is controlled by the state of Illinois. Okay, so it's going to be very important for you to ask your loan officer where that rate is, at any given day, because I've seen, yes, there is a benefit to it, but again, depending on where the interest rate is, it can be detrimental, if you will. Okay, right now it is very low. So
Yeah.
please ask and find out. Okay,
It does
a few
go up
months ago.
But so far it's at 3% yesterday.
So yeah, it is very beneficial. A couple months ago, it was actually a lot higher than what the banks could offer you with regards to their products. So again, very important to get the most information because it can change on a daily basis.
Yes.
Okay. Again, that is a down payment assistance from the state of Illinois. IDA product. Not all banks offer that type of product. They don't all work with it. So again, another reason why you should be interviewing at least 3 banks. Okay. Let's see here. With regards to that Pmi Insurance, okay, that we mentioned, and I'm sorry for going back to this, but I think it's important for me to mention to you that with the FHA loan, if you choose the FHA loan, yes, it's a great product because it's at least a low down payment and so on and so forth. But something to consider, very, very important with FHA conventional and your community lending and versus the PMI payment. Now, your conventional loans and your community lending loans, if you're going to be paying that PMI insurance, which typically you will when you don't give at least 20% down, you'll pay that amount until you pay down that 20%. Okay, so for instance, if you're purchasing a $100,000 home, just to use a round figure, you're going to pay that PMI insurance until you pay down the loan to $80,000. Okay, it's that simple. Then the bank doesn't see doesn't see it as a factor anymore, so you won't have to pay that insurance anymore. With FHA, okay, not the case. It used to be a few years ago, okay, that once you paid it down 25%, you no longer had to pay that insurance.
Yeah.
Not the case anymore. Again, these are federal funds. Although they're filtered through the banks, these are federal funds. Right now, federal government, okay, they want their money insured all the time. So if you're going to have a 30-year term with FHA, guess how long you'll be paying that PMI insurance? You're going to be paying it for 30 years. So again, something to consider. Again, that is what it is now. That may change in the future. We don't know. Okay, so something to consider. Any other questions with regards to those products or PMI or anything of that nature?
Armando, I have 2 questions from the chat box.
Yes, please.
Okay. One question was, I am purchasing a loan for a building. My credit is a bit above 730. I already have a lender and a realtor that I'm interested in and have 5,000 in savings.
Okay.
Would they be able to qualify for down payment assistance? She is doing FHA.
That is a great question, and I can give you a partial answer. Okay. It is quite possible that you will qualify for down payment assistance. However, in order for you to get a definite answer for that, you'd have to ask your loan officer that you're working with now.
Okay.
And the reason for that is because not all banks will offer. Again, just as an example, not all banks will work with IDA. Okay,
Sure.
Not all banks have their own down payment assistance program. So that would be a question that you should be asking the loan officer that you're working with now. Now, if you don't have a loan officer, that's something that you should be asking in the interview that you're going to be having with those 3 banks.
And they're planning to buy a 2 flat. Would that make a difference?
Not necessarily, because like I just stated, the type of product, typically first-time homebuyer products programs, they will cover single families and 2 flats.
Okay. Thank you.
Okay, so you should be okay.
Okay. And then my last question, if they're married, do they have to both be on the home buying process?
That is a great question, and the answer is going to be that all depends on the product and program that you're using. Okay, so again, I'm going to give you an example. Although let's say I was applying and I'm a first-time homebuyer and I want to buy. Now I can, submit the application on my own, okay, which is acceptable. And if I go through the bank, then the bank is going to be telling me, well, you're the only one that's on the application. If you're using a regular FHA or regular conventional, well, all we need to know is your information. Never mind your spouses, they can be on the title, and that's okay. Okay. However, if you're going to be using an IDA program, for instance, they want to know everything about your spouse and your whole family all together. Okay.
So that's for
So
the
if you have kids,
assistance process.
that's correct.
Got it.
That is correct. Okay, so if you have children that are over 18
Yep.
and they are already working, they will consider their income as well. Okay. So
Good old
something
IDA.
very good IDA. Yeah. Okay. But for the most part, the other types of products, your FHA, your regular conventional, your community lending, that may not be the case. They'll only need to consider your information. Did that answer your question?
Yes, thank you.
Okay. Any others at this point? No? Okay. Well, we're going to continue just in the interest of time, and I think I have just a few minutes. That sound about right?
Yeah, we have 5 minutes left.
Okay. So I'm going to go through this really quick, and by all means, know that we all will be available if you should have any further questions or concerns. I'm just going to touch base real quick on somebody had a student loans question. Okay, and you said it. You hit the nail right on the head, Ms. Evie. Yeah, the majority will consider that outstanding debt, okay, and they'll use 1% of whatever that outstanding debt is, because the majority of them, you're not making payments right now, so we don't know what your payment's going to be. Okay, so that's the reason why they use that 1% of whatever the outstanding balance is. I have seen, however, okay, where some underwriters, depending on your situation with regards to those student loans and whether or not you're going to have to repay them or not. What I've seen in the past is that one of the applicants that I had, they were actually going to be forgiven. Okay, that was already determined. She was able to get a letter, okay, from the student loan people, whoever they had it with, that stating that yes, after a certain time, I believe it was 24 months, if she did X amount, they were going to be forgiven. So we didn't have to include those in there. Okay, so it all depends on what your overall situation is as well. Okay, I hope that's a little bit of information that you also can look into as well. Okay, now apart from down payment assistance, understand that there's some other types of assistance. There's some closing cost assistance out there as well that banks may be able to offer you. So in my opinion, go and get everything that you can, okay? If they're willing to give it to you, take it, okay? Closing cost assistance, from what I know, okay, it can be anywhere, and I've seen, again, from bank to bank, I've seen from $300 to about 0.5% of whatever your purchase price is going to be. Okay, so for instance, if you're going to purchase a $200,000 home, that closing cost assistance can be $1,000 additional that you can use. Okay, that's $1,000 that doesn't have to come out of your pocket. So again, apart from the down payment assistance, also ask the question, hey, do you have a closing cost assistance product or program? Yes. The worst they can tell you is no. Okay. And one last thing, please, actually 2 things. No large deposits. Please do not make any large deposits because it's going to be a headache. Okay. Within that 2 months, they're going to ask you for 2 months worth of bank statements. Please try to avoid large deposits.
What's large?
I'm sorry?
What's large?
Oh, large deposits is anything that's above your pay structure.
Oh, okay.
Okay. So if you receive $1,000 a month from pay, and I see an additional deposit in there for $1,002, guess what? They're going to ask the questions.
Really?
Where did it come from?
Wow.
Absolutely. That is the guideline.
Oh, wow. Okay.
Yeah. So, something to consider. And if it's okay to have it. I mean, if it's like, for instance, a gift from your family member, that's okay, as long as we have the documentation for it. Okay. Because if it was cash, that's going to be difficult.
Wow.
Okay, They're not going to consider it for your funds that you're going to need for this transaction.
Interesting. Okay,
Okay.
good to know.
Very, very important. Okay. And then number two, document, and excuse my language, document the heck out of everything. Okay. Documentation is everything. Documentation for everything. Please do not throw out receipts. Please do not throw out anything. Documentation, keep it until you have an actual closing. And even then, keep
Wow.
it. Okay.
Give me an example.
For instance, the large deposits, okay, the gift funds, okay. If you, for instance, if you had a collection account, you know, that was in your credit reports that you have taken care of, okay, you've paid it off because, you know, with the help of Northwest Side Housing Center, you took care of that. You've seen it, you know, you identified it and you took care of it, you paid it. However, the collection company took your payment, but they never sent you a receipt.
That happens.
The underwriter's going to want to see your receipt.
Yeah, that happens a lot.
They're going to want to see that. So document everything. Okay. I believe that would be all, unless there's something that you all want me to cover that I have not. By all means, please feel free to reach out.
What if they pay the collection online?
If you pay the collection online, that's okay. Okay. Now, when you do that, and if you do that, which is acceptable, please take a screenshot or print out a receipt of that payment, because when you pay it online, you should be receiving some type of confirmation that it's been paid. Okay. So make sure that you take a screenshot, print it, save it, whatever the case may be. Document.
Confirmation number, would that be okay?
Yes,
Okay.
yes, that would be okay, because with that confirmation number, then our processor, once the question comes up, they can contact the collection agency and use that number for verification.
Great.
Okay.
Wow. This has been a great hour and a half, guys. What do you think?
Yes. I think it's been productive.
I think so too.
For the first time, yeah.
Right? We did great. High five to all of you.
Yeah, thank you for joining.
Thank you all also very much for first and foremost taking this first step, and I congratulate you once again for taking this first step, because this is the most important step. Okay, getting informed, and information is everything.
Do you have any type of way that they can contact you directly if they want to reach out to you with a couple of additional personal questions?
Sure, absolutely. I don't know if you wanted you go about it to where you can send them the information, or I can give them my email address, or you tell me, how do you want to handle this?
Everybody jot down Armando's email address. You can go ahead and give it to them, and then I'll send them your info with the PowerPoint presentation.
Okay. Well, my email address is first name, which is Armando. That's ARMANDO dot Marmolejo, which is MARMOLEJO at 53. That's the number 5, the number 3.com.
Awesome. All right,
Thank you,
guys.
Armando.
Thank you all.
We'll see you guys same time, same channel. Unless you have any more questions for me, this has been a great Zoom, and enjoy the rest of this beautiful day.
Yes, please be safe out there.
Yes. Remember, masks today, official.
Anybody has any questions? Everybody's good?
I will go ahead and send you Armando's email with the PowerPoint presentation, so that way you'll have it also. Thank you. Thank you, guys.
All right, thank you.
Thank you all very much. Take care now.
All right, take care.
Bye-bye.